Hi everybody, it's Clarke Camper with the October edition of Wall Street and Washington. Well, finally, we're very close to the election. It's right around the corner, and we have a horse race on our hands. As everybody knows, either candidate could win. And so with that scenario, I thought it's worth taking a little bit of time and looking at the impact of the election outcome on three things. First, on the Fiscal Cliff, second, on the Dodd-Frank Act, and third, on the membership of the SEC and CFTC. Before I do that, I want to issue my standard caveat that my comments are not meant to be political. In other words, I'm not favoring or trying to advocate for one candidate over the other. I'm just trying to be analytical based on my several decades of experience in Washington. So first, in terms of the Fiscal Cliff, does it really matter who is elected president? I actually think in the short run, not so much. The reason I say that is because I think that no matter the outcome of the election, right after the election, during the lame duck session of Congress that will occur, you're going to see Congress and the president roll out that proverbial big old can. They're going to kick it down the road. They're going to give themselves more time to address the Fiscal Cliff, say maybe 6 months. There are many people who feel otherwise, many smart people, but I've been consistent in saying that I thought that Congress would wheel out that tin can because they may be very partisan, but they're not crazy. They know that there would be very severe impacts on the economy. There probably would be very severe political impacts if Congress didn't forestall the Fiscal Cliff. And so again, I think that tin can is going to be pulled out. Now, I think a little more interesting question is, does it matter who's elected president in terms of what would actually happen during that 6-month period? You know, what about the substance of addressing the Fiscal Cliff? There, I actually think that it could make a difference. Experience has shown us that when one party controls the House, the Senate, the presidency, the party is less likely to be able to come to grips, make the compromises necessary to grapple with the big issues. And so that means that I do think some form of divided government in terms of different parties controlling House, Senate, White House would actually be more beneficial in terms of coming up with a substantive addressing substantively the Fiscal Cliff. But again, I want to be very clear, I'm not making a partisan comment, just an analytical one. Moving right on to the Dodd-Frank Act, it's very interesting the Dodd-Frank Act has taken center stage in a way that I don't think any financial reform legislation ever has. In that first debate, Romney brought up many times the fact that he wanted to repeal the Dodd-Frank Act. Apparently Google said that Dodd-Frank was one of the most intense search terms during that period because everyone was trying to figure out what the heck it was. But what's interesting is, despite Romney's vow to repeal Dodd-Frank, I think there are not the votes to do that in Congress. More specifically, in the Senate, to do anything meaningful, you really have to have 60 votes. At this point, short of anything cataclysmic, neither party is going to have 60 votes in the Senate, regardless of who controls, and that means that any changes to Dodd-Frank are going to be around the margins and not fundamentally to the act itself. So what does that mean if Romney were to be elected? Well, in kind of a perverse way, I think that a Romney election would actually create more uncertainty because Romney would appoint policymakers who would be fundamentally hostile to the act while the underlying act was still on the books. And that obviously would create more uncertainty. Implementation would continue to be even further delayed or forestalled altogether. Again, not a partisan comment, but just an analytical one. Moving on finally to the membership of the SEC and the CFTC. Again, what would an Obama victory or a Romney victory mean for the membership of the SEC and CFTC? Let's take the SEC first. Mary Shapiro's made no secret of the fact that she's done. She's been in for 4 long years. So even if Obama's reelected, we are going to have a new chair of the SEC. Whoever Obama appoints, I think, would be likely to continue the policies that Mary Shapiro has set forth already. So in other words, it would be a relatively stay-the-course SEC under an Obama victory. By comparison, I do think if Romney were to be elected, there's a chance that you get somebody in like Dan Gallagher, who's a relatively new member of the commission, who's been talked about quite a lot about a possible Romney SEC chair. If Dan were to be in, I think you could very well see a very activist SEC, particularly in market structure. Dan has made no secret of the fact that he'd like to shake things up on market structure. He's talked recently quite a bit about revisiting the SRO roles of exchanges. So again, I think in this case, a Romney presidency might see a very, very different SEC. A similar thing occurs with regard to the CFTC. Gary Gensler, most pundits feel, is unlikely to be reconfirmed as chair of the CFTC, even if, by the way, if Obama were to be elected, he might be renominated, but again, he'd be unlikely to get the votes in the Senate to be confirmed. So in that scenario, again, we're likely to have a new CFTC chair regardless of who wins the election. Again, as with the SEC, I think that an Obama administration would be likely to appoint somebody who would likely continue implementation of the Dodd-Frank Act. Again, it's taken longer than anybody expected, but one way or another, you'd see an Obama CFTC chair continue to implement the act, probably to its conclusion. By comparison, again, a Romney CFTC chair would be likely to be quite hostile to the act, and I think there you would see a very, very different CFTC. They'd pull out every trick in the book, and I don't mean that again disparagingly, but they'd do everything they possibly could to either roll back regulations that have been finalized or proposed, to forestall continued implementation of Dodd-Frank Act, et cetera, et cetera. So again, I think the outcome of the election matters very greatly in terms of what kind of an SEC and CFTC we see. So with that, I'll wrap things up, and we'll see you next month on Wall Street and Washington.